We appreciate all of the guests who have appeared on our show and sincerely thank them for providing you, our audience, with useful information. However, the advice our guests provide is theirs, and we encourage you to seek out a professional if you have specific questions about any topic we cover on the Crushing Debt Podcast. On this week's episode of the Crushing Debt Podcast, the return of short sales.
Welcome to the Crushing Debt Podcast with your host, Florida attorney Sean Yesner, where our goal is to help you get rid of the financial bullies in your life.
So welcome back to this week's episode of the Crushing Debt Podcast. My name is Sean Yesner, owner and founder of Yesner Law, and I have a guest for you this week. But before I get to my guest, I do want to talk about our sponsor. Those of you that have been longer listeners know that our sponsor is Sam Cohen, owner of Attorneys First Insurance. Sam writes errors and omissions insurance for attorneys and title companies all over the state of Florida and all over the country. If he can't write E&O insurance for you, then he can find someone in your state to write it for you, or he can become licensed in that state. So it's all the same thing, whether you need errors and omissions insurance, which is also called E&O insurance, which most of us know as malpractice insurance. And Sam only writes for attorneys and title companies, both here in Florida and around the country. So if you want to get in touch with him, it is sam@attorneysfirst.com or www.attorneysfirst.com. The other thing I want to continue to promote is my newest book, which is called Become Debt Free. I am eventually going to get it up on Kindle and put it for sale, but if you want it for free, you can go to www.seanmyesner.com/become-debt-free. So you can get the book there for free, or you can wait for me to put it up on Kindle and you can buy it. If you want to support me, I would appreciate it, but really the goal is to get it in as many hands as possible. So again, seanmyesner.com/become-debt-free. But I want to get to my guest on this week's episode. So she is a licensed real estate and short sale specialist with over 14 years of experience. She's a Tampa native, offering a wealth of knowledge and experience working with sellers. She also modified her own loan with Bank of America in the last market crash, which we're definitely going to talk about. So welcome my guest this week, Brenda Kennedy. Welcome, Brenda.
Hey, Sean. Thank you for having me.
So I want to talk real quick. We just had the state moratorium end, or more accurately, the governor did not extend it. That moratorium prevented foreclosures in situations where the default was due to COVID. We also have a couple of federal moratoriums put in place by the CARES Act, but those only apply to federally backed or federally guaranteed mortgages like Fannie, Freddie, FHA, HUD.
Right.
And so I am just now starting to see foreclosures start up again in terms of non-federally backed private investors, private note holders. Those types of people are just now starting to fire back up with foreclosures. What are you seeing in the marketplace?
I'm seeing a lot of foreclosures. All of the foreclosures that have been postponed from maybe 12 months ago, before COVID started, all of those files are moving forward very rapidly. I do have a couple of short sales that have, been in the process of like a 2-year process. Well, they immediately now have a sale date. So there's no more delays on the ones that have taken the longest to move forward. And those are happening quickly.
Yeah, and I think it's interesting. You mentioned ones with defaults prior to COVID. So the big part of the law was that the foreclosure was stopped if you could prove or if you could show that your default was due to COVID. But I've had the best example I can think of. I had a client whose default was in 2013.
That's right.
And the foreclosure sale happened to get scheduled, and then COVID hit. And when we tried to argue you can't foreclose because of COVID, the bank's argument was, well, her default was in 2013. How does that relate to COVID?
Yes, you're exactly right. Exactly. All of those are moving forward.
So if someone had a default that was not due to COVID, but maybe COVID has interfered now with your ability to catch up, there still might be an issue there. So a short sale is really an option when someone wants to get rid of their house, which is where you come in as a real estate expert, as a real estate specialist, a short sale specialist. You can help people who want to get rid of their houses. Now, I know you said you also modified your own loan with Bank of America, so you have experience doing loan modifications as well, I assume.
Yeah, I do. Unfortunately, back in 2008, when the market crashed, my husband was in the remodeling business. I'm obviously a real estate agent. So that crash affected both of us. I mean, like a light switch. So I contacted Bank of America. I know short sales very well. So I would rather keep my home instead of doing a short sale. So I had to jump through all the same hoops with Bank of America as a short sale, but for a loan modification, taxes and proof of income and profit and loss statements, the whole deal. So I did have a young lady that helped me out and was very cooperative. Communication is the key for sure on a short sale or a modification. And it took me, that's why I can relate to customer or clients so well, because it took a year for that. So I did not pay my mortgage for a year. So I know, and I can relate to customers and clients that need to do a short sale, because that is nothing more stressful than missing your house payment.
Yeah, and two points that you brought up. So modification is if you want to keep your house, where
Right.
Short sale is if you say, I can't afford it, so it's time to get rid of it, but I owe more than the value of the house. So if my house is worth $200, but I owe $250, so right. I have to do a short sale. The other thing that I think you said, which was really good, is communication is key, and the document requirements. So I know one of the big challenges I've had is you send in the short sale package or the loan modification package, whichever it may be, and you send in a package of, 20, 30 pages, and the bank says, well, I didn't get, this document. And you're like, well, that's impossible because that document was page 10. And so you got the full 30-page fax. How did you not get page 10? And that starts to frustrate borrowers.
That's where I come in, because I keep that packet together because I know for a fact that they're going to ask for the same document about 6 times before someone finally gets it. So unfortunately, I have had to keep the packet together, resend it. Okay, let me contact your supervisor and I'll resend it to them. So that's why doing a short sale with all of the paperwork involved, I handle that for the customer, for the seller, because it is very frustrating. And because I've been there, done that, I know how to get around that and make sure they do get it.
Yeah, I mean, a lot of times what I'll have to tell the homeowner is, look, I know we do the same thing. We keep the package put together, so if we have to send it multiple times, we can. But, if the bank wants an updated pay stub and you've had it and you don't want to send that bank that updated pay stub, we might as well deny the modification or deny the short sale.
Yeah, you have to get them what they ask for. That's the bottom line. If I know it's a pain, and that's why I tell sellers, but trust me, I know, but give it to me and I will have it and I will send it to them. So I kind of help along with that frustration. Right.
We're talking about the state versus the federal requirements in terms of the moratoriums and the fact that foreclosures appear now as we record this. This is probably going to release in early November, but foreclosures appear to be firing up again. I know the state of Florida no longer has a moratorium against foreclosures. The federal does through the end of the year, at least under the CARES Act, as long as it's extended. What I've noticed, though, is that since the crash in 2008, I don't have very many short sales pending anymore. I mean, property values are starting to recover. I don't know that I think we're headed for some kind of dip or some kind of crash, but I don't think it's going to be driven by real estate like the last one was.
I'm not sure. I think it's heading in the same direction only because prices have done exactly what they did back in 2006, 2007, where the price of someone's home is like doubling. I mean, they're buying the flippers and they're making $60,000, $70,000 in 90 days. That bubble is getting big like it did before. The prices everybody's outbidding everybody right now. If you get a property that's on the market, you're getting 6 bids instantly. And every single property, the agent will tell you, owner will pick highest and best by so-and-so. So that bubble is getting bigger and bigger and bigger. Now that everybody is laid off work, We're trying to get the economy, going again. All of those prices have been inflated. So now you have people that are 6 months behind.
And what short memories we have from just about 10 years ago, give or take, is when we were in the middle of this craziness, this bubble. So what other options? I mean, I think the two primaries are modifications and short sales. Modifications if you want to keep your house, short sales if you don't want to keep your house. I know that most longtime listeners to the show know that I do bankruptcies. That's an attorney issue. We'll put that one aside. But what other options are you seeing out there in terms of forbearances or deeds in lieu or other types of resolutions?
The banks will do a deed in lieu. Well, the whole purpose to do a short sale is because you want to avoid a foreclosure. So the key, like you said, is communication. If you want to keep your home and you could not pay these past 6 months, which a lot of sellers don't fully understand, that all of those payments are now due. They thought, I've even talked to title companies where they had no idea that all of those payments are due now. I said, yes, all of the 6 months that have not been paid are due now, including your 7th or 8th month payment. So the problem is if their communication, they're past due, they don't want to talk to the bank. It's embarrassing. Now, I promise you, their phones are blowing up from the banks calling now. What are you going to do? How are we going to handle this? So the communication part comes in, and the banks, a lot of banks, you have to ask what your options are. Some will let you make payments on your past due along with your normal payment, but a lot of banks will do what's called a subordinate mortgage. They will attach it like a second mortgage, but you don't have to pay on that. But if you ever sell your home, it's a lien against the property, and you have to take care of that as well. So I have had short sales in the past where back when the market did crash, homeowners had forgotten that they did a subordinate mortgage. And the first thing is, well, I never signed anything. I don't have a second mortgage. Yes, you do. The late payments you had have been attached as a second lien. You just haven't had to pay on it. But when you sell your home or do a short sale, both have to be clean and cleared off title.
Yeah, and I think that's an important point, whether we talk about the Florida moratorium, the federal moratorium, the CDC, the CARES Act, whatever we talk about, they all say that these laws, these acts, these measures don't eliminate the responsibility to make payments. So payments are still owed. Whether we're talking about evictions, foreclosures, it doesn't matter. Payments are still owed. And I think a lot of people don't understand that. A forbearance is simply the bank saying we're going to forbear on taking some action, or the landlord saying we're going to forbear on taking some action. It doesn't eliminate. A forbearance plan is not designed to catch up the mortgage. It's just designed to push off a couple of payments. And the other thing you said that I thought was really interesting, subordinate mortgages, we'll talk about association foreclosures and association liens. So my definition of a short sale is that the total liens against the property exceed the value of the property. So I talked about the example I think I made was a $200,000 house with $250,000 mortgage. Well, I would change. Let's say it's a $200,000 house with a 181st, a 52nd, and a $5,000 association lien. So I think you're still above the value of the property when you take into account all the liens, just because the first can get paid off in full. In my definition, it's still a short sale because we have to convince the second and the association now to try to take less, right?
Right. That's right. I have had that in the past where the first was completely covered by the offer, but the $80,000 second was not. They would only receive 20. And yeah, that's a situation you have to work out just to have clear title. You have to clear the title. And it's funny that you say about the HOAs, and unfortunately, they were not included in the forbearance of all of this going on. So I have noticed that the HOAs are still foreclosing. Those
Right.
did not stop. So the people that were already past due with the HOAs, they were not suspended to foreclose. So all the foreclosures that's been going on for the past 6 months is even public record. You can even look. It's all HOAs. That's upsetting to me.
And I think the biggest danger there, not only for the people that are losing their house, but for those people that are listening that say, well, I want to invest in foreclosure properties. I would not suggest, I've got a lot of friends that do association law, but I would not suggest that an investor buy an association foreclosure unless you do a title search and you know what you're buying. Because the problem is, like we discussed, I just got done telling this to a client. Let's say that I buy at the association's foreclosure sale and it's a $5,000 lien and I bid $20,000 for the property. So there's a $15,000 surplus. Well, as the successful bidder, I don't get that $15,000 back. The owner gets that $15,000. And then under Florida law, there's even a question as to whether when the mortgage finally does go to sale, if I can get any surplus money from the mortgage foreclosure. And I think those are some of the most difficult, if not the most impossible, short sales to get. So the scenario, I don't know if you've ever dealt with it or not, but the scenario would be I would get the property at the association's foreclosure sale. I then learn that there's a first mortgage in front of me. And so I call the first mortgage and I say, hey, will you take less because the property's not even worth your mortgage? And the association says, you're not our borrower, we're not talking to you. Or I'm sorry, the bank says, you're not our borrower, we're not talking to you. Have you experienced any of those?
Oh my gosh, crazy. I have more gray hairs because of it. It is unbelievable. It drives me crazy. Yes, you have, if you know that old saying, if it's too good to be true, it probably is. You have a $200,000 home that has a $10,000 HOA lien. I've had people purchase those, then bring it to me and ask if I could talk to the short sale or the lender, the bank. It's Bank of America. I bought this home. I said, well, Bank of America has, they have a mortgage on the home. Like you said, I said, well, and I can't deal with them. Do you know where the seller's at? Well, no, the seller's been out for 6 months. I said, well, that's my third party that I get permission to talk to the bank. So without that, they're not going to talk to you. So you just lost your 10 grand. There's no way to get that back. There's no way.
Yeah. And I've had people, what I've said is really at that point, you become a landlord, you rent it out, you try to recoup that 10 grand investment, and then you let the bank take it away.
You're exactly right. That's exactly right. They rent it out. You're right. Mm-hmm.
I've seen other scenarios where, and it doesn't happen often, like you said, but if you can find that owner that you just foreclosed in the association sale, maybe you can pay some money and entice that owner to help you with the short sale. Now, I say pay some money and entice him. The bank's not going to want to know that. The bank's not going to want the owner to get any money, but maybe there's a way you can work with the former owner to then accomplish the short sale. I don't know.
Right. But you're also dealing with a very angry owner that just lost their house.
Right.
In the HOA. So that's also a problem, because like you said, if you want to entice them with money, perhaps, but they're also very irritated because they have lost their home. So that's on top of that.
Yeah. And the same analysis applies whether it's a condo, whether it's a second mortgage. You really want to do a title search and understand what you're buying.
Yeah, absolutely.
But on the flip side, this is also a show about, to help people who may be facing foreclosure and they're trying to figure out what are my options. I think there's still an opportunity to defend a foreclosure, to slow it down so that we can get a loan modification in place, so that we can get a short sale in place. Are you seeing short sales where the lenders say we want our deficiency, or in the majority of the cases are they waiving their deficiency?
Actually, to be honest with you, about 90% of them I've had waive, they've received a deficiency waiver.
Right. And
the ones that were a little bit more difficult are the ones, unfortunately, I had an attorney that had some health issues. And I guess because of the situation, or maybe the amount of income that he perhaps could make in the future, because he's an attorney, they would not give him a deficiency waiver.
Wow.
So, yeah. I think if they see that perhaps later down the line that it might be something to be worked out. But so far, I haven't had any issues just with that one gentleman.
Well, and I also see that when there's mortgage insurance involved, it's more likely to want the deficiency to be repaid. If it's a Fannie Freddie, it's more likely to want to have the deficiency repaid. But like you, the majority of cases that I've been able to work out on short sales, they have not wanted the deficiency. Now that brings up tax consequences, which again is sort of getting beyond the scope of this particular episode. But it's not always roses. When the bank says we don't want our money, the IRS steps in and says, well, if they don't want their money, you got a benefit, and if you got a benefit, Uncle Sam wants his cut. But again, that's maybe a discussion for another episode. But so for fun, what is one or two or however many examples you have, some crazy stuff that's happened in a short sale?
There's so many. I've been doing this for a long time. The most recent craziest one I had was with a gentleman that was he was a veteran. We were dealing with Fannie Mae, and I was dealing with should we say the name of the bank? Maybe not.
Yeah, I don't care.
Oh, okay. It's Mr. Cooper.
Okay.
Wonderful to work with.
Right.
Dealt with them many, many times. Well, we had the short sale approved. The approval letter net came back higher than the agreed upon on the closing disclosure or ALTA statement, or the old name, the HUD. So I went back to the bank and I said, hey, listen, you guys have not paid the property taxes, which are now due as of November 1st. So property taxes are due as a seller, which the bank is considered the seller in this case. You guys are responsible for the property taxes. Well, they came back and said they are absolutely not paying the property taxes, and that the seller, who was a veteran, could take some of the property taxes out of his relocation incentive. That's something else we could probably talk about. He only got $1,000. The taxes are $4,000. So they said the real estate agents and everybody else can take it out of their commissions. So, of course, that made Brenda Kennedy very angry. So I went directly, Sean, to the Veterans Affairs Administration. I'm very good at hunting people down, and I found the head of the Veteran Affairs. I sent him an email. The very same afternoon, a young lady called me and said that she was from the Veterans Department, and could I please explain the email that I had sent regarding this gentleman and the taxes. I explained it. She said, could you please give me the negotiator on Mr. Cooper's side, their number, their email? Absolutely. Well, within 3 days, we had the correct approval with the taxes paid, and the gentleman still got his relocation, but they also upped it to $1,500. So
nice.
Yeah. It's things like that I really fight for. And I've done this for so long. Unfortunately, I do have contacts for CEOs for banks. And if I get a hard time, because you got to remember when you're dealing with a short sale, they have assigned somebody to the short sale. It's, my Deborah with blah, blah, blah. Well,
right.
Deborah's just doing her job. It's not her fault really, but also try and work with the seller because they're already in distress. So when they just flat out tell you no, I have to go around them. And I'm telling you, when I call or send an email and they're like, Brenda Kennedy again? It works out really well.
I had one where, a lot of times they'll say in their approval letter, here's our number, whatever that number happens to be. And if there's any extra money in the transaction, we want that too. And so I had a situation where there was a delay in the closing that changed some of the prorations, and it ended up giving the homeowner, I think it was something like an extra $50 or something. And so we ended up closing. We sent the full amount to the bank. The bank then kicked the wire back and said the amount that we received does not match what's on our approval letter. And I said, well, yeah, it's more. And they said, no, it has to match. And I said, well, your approval letter says if the borrower gets any more money, that you need that money as well. They said, yeah, but the amount needs to match. I said, okay. So I sent the wire matching the amount that was, it was exactly what they required in their short sale. Then I sent them a letter and said, what do I do with the extra $50? No response. So I sent the $50 in. They kick it back because we don't know what this is or what it's for or how to apply it or whatever. So I then sent another letter and I said, I'm holding $50. If you don't answer me by such and such date, I'm releasing it to the seller.
Right.
and I never got a response from him. Cut the seller a check for $50, and here you go. But it was so much of a. I said, can't you just when the original wire went and they said it's not the amount that matches, and I said, well, can you just send back the overage? Can you send me back the $50? And they said, no, we have to send back the entire wire.
Yeah, that's crazy.
I'm like, we're incurring more in costs to shoot wires back and forth than the stupid $50 that was extra.
Right. Yep, you're exactly right. I haven't had that happen. I have had where the net was more than what their approval letter said. I have had that happen. But again, I'll just contact the gentleman I've been dealing with at the CEO and say, hey, listen, this is how much you guys want. We're over sometimes $2,000.
Wow.
Because the title company they want to make sure the tax prorations are correct.
Right.
So sometimes they overshoot it because we don't know if the short sale is going to take, 30 days or is it going to take 3 months? Well, so they do that proration.
That may be a good topic as well. Why do you think some of them take 30 days, 60 days, others take 6 months, 9 months? Is it just that you mentioned Mr. Cooper, which Mr. Cooper was what, Nation Star, is that right?
That's right.
I don't know why they changed their name from Nation Star to Mr. Cooper. I guess it's easier to say Mr. Cooper's trying to take my house than Nation Star is trying to take my house. But why do you think it is that some banks take a real short amount of time and other banks we get embroiled in this red tape, or is that the answer?
I've had a short sale approved in 30 days when it's just one mortgage, no HOA, no second, no other issues, no lien problems, and done. They blew it through, done. I think it takes longer because the more you have attached to it. Like, for instance, I have one where the deed was incorrectly recorded the first go around when they originally bought the house. So now we have to have a corrective deed. So I track those people down to correct the deed. The second mortgage, they're waiting on the first approval. How much is the first going to give us? Because you remember the first mortgage lender dictates what everyone gets, including the agents. And that's the other thing. Sellers, I know that they're already on a budget. So they're not the ones that have to pay the agents or any closing costs for that matter. It's the bank that pays it. So the second is not moving forward until they find out what the first is.
Although I've had situations where the first says, we'll allow the second $6,000. And then the second comes through and says, well, that's great, but we want 10.
Right. I have had that happen. And the agents kicked in on that.
Oh, really?
They did. It was a big one. Yeah. The agents had to kick in.
Yeah.
Sometimes they do. I mean, they don't have to. They're not obligated to do that. But my personal feeling, and unfortunately, I was that agent. So I did kick in because in my eyes, my biggest thing is I love to help. I love helping sellers. I love it. And I love the challenge. So that's why I'm so successful at getting these approved. But in cases like that, you're right. Some of the agents will say, forget it, I'm not doing that.
Yeah. I've got another workaround for something like that you and I can talk about offline, or if you're listening to the show, I don't know that I necessarily want to put this strategy on the recording because it's in a little bit of the gray area. But if you have that kind of a situation come up where the first says we'll give the second $6,000 and the second says we want more than $6,000 or whatever the numbers happen to be, give me a call. Give Brenda, contact Brenda. I've got another workaround that I'm not going to put on the record, but I will let you know what it is if you call me because it's a little bit in the gray area. But I also wanted to talk about, you mentioned the relocation incentive, and so that's a question that I get a ton. What kind of relocation incentives, and what we're talking about with relocation incentive is where the first mortgage will allow the homeowner to keep or to get some amount of money from the short sale. You mentioned 1,000. I've seen them as high as like 5,000, but that's rare. So what kind of relocation incentives do you see, and when do you see that sellers are eligible for them?
The relocation incentives, now back when the market crashed in 2008, the relocation incentives were like $10,000.
Yeah.
So now that's all ended. 90% of the time I get a $3,000 relocation incentive for the sellers. Sometimes, like this Fannie Mae, they would only allow $1,500 for this particular gentleman that was a veteran. But 90% of the time, it is a $3,000 relocation incentive, and that is paid to the seller at closing. The title company actually cuts the seller a check for the $3,000. The deal has to be done, and they are part of that process.
Yeah, and it's disclosed on the settlement statement.
That's correct.
And I would think that, at least in all the ones that I've seen, one of the things we talked about was deficiency and the waiver of deficiency and all that kind of stuff. I would think that if the bank is going to give them a relocation incentive, the bank is not going to pursue deficiency. I mean, that doesn't make sense. Here's $1,000 or $1,500 or $3,000 to move. And oh, by the way, the loan had a $50,000 deficit that we're going to sue you for. That doesn't really make any sense to me.
Right. And it does, the approval letters will spell out, that they are not going to pursue them for the deficiency, which is nice. Because then we know up front, if it's going to be, they're going to go after you or they're not.
Yeah, and that's something you definitely want to look for in the letter. And so if you have questions, again, contact Brenda, contact me. We can take a look at your approval letters. Brenda can negotiate the short sale or facilitate the short sale and let you know, point out where the language is. It says the bank's not going to pursue deficiency. And another thing there, too, from the legal perspective, the law was changed back in 2014. The Florida law was changed to now impose a 1-year statute of limitations. In a foreclosure scenario, the bank cannot pursue a deficiency after 1 year. The interesting thing is the Florida law mentions foreclosure sales and deeds in lieu, but does not mention short sales. So there is still an argument that there is a 5-year statute of limitations to go after deficiency in a short sale scenario, but only a 1-year statute of limitations to go after deficiency in a deed in lieu or foreclosure scenario. And so a lot of people then say, well, I want to do a deed in lieu. My experience, and you can talk to this as well, but my experience has been that the bank is not going to give you a deed in lieu until you first try to sell the house. They don't want it back. So before they take it back in a deed in lieu, they're going to want you to try to do a short sale first.
Right. Yeah. They have what's called, Mr. Cooper's very famous for that, is the waterfall. And so is Select Portfolio. They want you to do the waterfall. You have to try and do the short sale first, try and get an offer that way, put it on the market, get the offer. It's a loan modification first. They want them to jump through the loan modification first. If they do not qualify for that, then you're allowed to try and do a short sale. And if we can't get through that, then they will consider, not do, doesn't mean they're going to do it, but they will consider doing a deed in lieu. And I have had that happen as well.
Yeah, none of these options, unfortunately, are guaranteed. The bank is going to do what the bank is going to do. So
that's right. And that's the other thing with the short sales. You have to prove you are in a hardship. Now, this COVID-19, that's why I'm thinking that January, February of next year is really going to start kicking in short sales, because now I've lost my job, or perhaps they have gotten ill. Perhaps maybe they lost a spouse during this COVID-19. I mean, all of those things, you are throwing you under that case where you do qualify to do a short sale. So, you can't just, well, I lost my job and I'm done. But what if your house has equity in it now? Then you have to try and sell it. So there's different scenarios. The bank, like you said, it's not guaranteed. Nothing's guaranteed.
Yeah, and I think the hardship, the only thing I've seen that has not worked as a hardship is my house dropped in value.
Right.
Because to the extent it dropped in value for you, it dropped in value for the bank. So I've not seen that as a compelling hardship, but I agree. I think I lost a spouse during COVID. I lost a family member during COVID. I lost my job during COVID. I think all of those things can create, it's the thing that used to drive me crazy in the mortgage recession that we had was people saying we need to stop foreclosures. And I kept saying, that's like cutting off your arm and saying we need to stop the bleeding. You're not getting rid of the cause of what's causing it. So, to say we need to stop foreclosures, that's never going to happen. We need to stop COVID. We need to stop divorce. We need to stop, death of a spouse. We need to stop job loss. We stop that kind of stuff. then we'll start stopping foreclosures, has always been sort of my opinion.
Right. Yeah, exactly. I will say that I never thought in my lifetime that we would ever see anything like this.
No, it is definitely interesting. But I want to give people your contact information. So I've got for your email, Brenda at KennedyHomeSales.com. And again, I'll put that in the notes. Kennedy HomeSales, KENNEDY, homesales.com. Or if you want to give out your telephone number, you can do that.
Of course. Yeah, absolutely. You can text me, call me. I love text. Text is great. It's at area code 813-732-9593.
Anything that we didn't cover, anything that you want to say or add?
If you're in a situation, the bottom line to me is communicate with the bank. Try. You don't just avoid the phone calls, because that's very important. Not communicating is not going to help. So either you can call me and say, hey, can you help me with this? I can even help you with the modification. I've been there, done that, so I can kind of help hold hands and let you know what to do. But that's my biggest thing, is don't ignore it. Things like that don't just go away. It'll only get worse.
Yeah, I agree. I mean, I've heard banks say they don't want your house. They want their stream of payments. But if you're not making your stream of payments, you pretty much leave them with no alternative. So I agree. Communication with the bank is key. And Brenda can help with that. We can help with that. Again, you can contact her, Brenda at KennedyHomeSales.com, or her number, 813-732-9593. Thank you, Brenda. I appreciate you being a guest on the show this week.
Hey, thank you for having me. I appreciate it, Sean. Congrats on that new book.
Yeah, thank you. So if you have questions, again, give me a call or buzz. Definitely give Brenda, contact Brenda if you have questions about loan modifications or short sales or any of that stuff. You're worried about trying to save your home. You're worried about getting rid of your home and limiting your liability. Brenda can help you with that, definitely. So I think that is going to do it for this week. Again, thank you, Brenda, for being a guest.
Thank you.
And like I say at the end of every episode, I hope that at the end of the month you have more money, rather than at the end of the money you have more month. That'll do it for this week's episode of the Crushing Debt Podcast, and we look forward to talking to you in next week's episode.
If you have questions that you think would make a great topic for a future episode, please email Sean or connect with us on social media. Sean Yesner and Yesner Law, PL, are Florida licensed attorneys. The information contained in this week's episode is not a substitute for legal advice. Your situation may differ, especially if you are located somewhere other than the state of Florida. If you have questions, please contact our office or contact a local attorney. Thank you for listening to this week's episode of the Crushing Debt Podcast.